Hey everybody, we are witnessing an awesome rally in stocks. If you're wondering when should you take profits, I've got a really cool signal that you're gonna wanna check out. Let's do this. All right, you guys know that I am an eternal bull. However, I do pay attention to data. So this is the big money index, and why it's important is because it measures thousands of stocks that are seeing stocks going up as volumes are increasing. So that is indicative of institutions piling into the shares. Now check this out. So back on July 14th, we actually were oversold. That is a very powerful buy signal, right? We went out, told everybody about that. Now we've reached overbought. That's this red area. And here's the kicker. We haven't been overbought for a long time, right? In fact, we got to go back all the way to December of 2020, the last time we got overbought. And so you got to be asking yourself, oh my gosh, does that mean go and sell everything? Well, let's go ahead and dive into the data to figure out what overbought means. So here's my latest blog post that I just put out. This is at MAPsignals.com. Your sell signal to take profits. I have a link in the description. Check it out if you really like unique insights. But check this out. So went over here. We're reaching overbought. And here's what's really interesting about it. This is the second quickest from oversold to overbought in our history. The only other time that this happened this fast, and this happened right about 5 weeks, was 1997. All right. So I asked the question, if velocity of buying is this strong, right? Does it mean that we should sell stocks? Does it mean that stocks are likely going to be higher months and over a year from now? Well, check out the data. The data is actually very bullish, believe it or not. So we just got into overbought. It happened super quick. So I looked back in our history and I said, I just want to see when overbought happens 3 months or less after being oversold. So basically, people are piling into stocks at breakneck pace. We had 11 instances. 1 week later, after breaching overbought, the market's up 0.16%. 1 year, it's actually up almost 18%. So if you're a long-term investor, it looks like we have a new rally that is starting, right? But we all know that stocks don't go up in a straight line, and sometimes we have pullbacks, needed pullbacks. So here is what you want to pay attention to. So check out this study. This is really cool. So I went back, I tested a bunch of stuff, and I was like, wait, should we look at how high the BMI goes for a sell signal? I couldn't find any reliable sell signal doing that. But then I started asking myself, well, what if the BMI starts to fall out of overbought? Is that a sell signal? And it actually is. So I tested a couple of different areas, and when the BMI, right? So when it's overbought, it breaks through 80%. If it breaks below 75% after being overbought, look at these returns. And this is really interesting. So we have 11 instances that are similar to now. When the BMI comes out of overbought, right, and it breaks below 75%, 1 week returns for the market are down 0.71%. And 2 weeks later, it's still down. And you might say, well, Luke, 0.71%, that is not that bad. Why are you even, throwing up the alarms as a sell signal? Well, look at the charts of all these 11 instances, some pretty ugly sell-offs. So check this out. So all of those instances, we'll look at the first 4. So this is from 1996 to 2002, right? So the BMI, it's overbought, it starts to fall. We break through that 75% level. Look at the crack in the S&P. All right, now come over here. We'll go to the next one. This is in 2011, 2012. BMI overbought, starts to fall out. Look at the decline in the S&P. Let's keep going. Right here, you can see it prefaced another massive pullback. Look at this. This is crazy. All right, so let's do a couple more. We'll go from 2003 to 2015. So you go to, look at this, big pullback here. Clear as day to me, even though if it doesn't nail the actual time that we pull back, just look at how choppy the SPY ETF is whenever the BMI starts to fall. And that makes sense, right? Because when the tide goes out, right? Listen, that's whenever you want to be a little bit defensive. This was a big decline. This is 2014, 2015. So let's look at a couple more examples just to drive this home. 2016 to 2020. We do see some chop here. Market did rally. Wow, we get over here to 2019. This pullback in the BMI, big decline in markets. Then we get to 2020. We all remember that big, huge decline. So if you are going to be looking for a sell signal, wait for the BMI, 75% or less. You can find out more about the BMI. Go to MAPsignals.com, follow along. We got a bunch of free stuff. Super cool. So that was a lot of data and history that we just covered, but here's the bottom line. If you're a long-term investor and you're wondering, look, is this rally real? Well, based on history, just looking at data and prior setups, a year later, stocks tend to be up about 18%. I know a lot of people don't believe that. It's not a popular, view right now. I think what's more popular is, when is this market going to pull back? And based on this history and this study, it is suggesting that when the big money index, right, it broke into overbought. We haven't seen that in almost 2 years. Whenever that BMI starts to fall, indicating that buyers are slowly, less and less, that indicates that there could be some trouble under the surface of the market, right? So a 75 BMI is what I'm going to be paying attention to in case I want to clip some profits or, make some bets on the downside. But remember, stocks go up over the long term, so you can't get too bearish. And so that brings me to my last message. If you like this type of content, it's super unique. We want to make you a better investor. Make sure to like and subscribe to our YouTube channel. Head over to MAPsignals.com. Follow our blog if you think that this is really cool. It comes out once a week. And go on Twitter at MAPsignals. You'll find us. We try to put a lot of unique content to make you a better investor. So none of this is personalized advice of any kind. We just want to make you guys a better investor. I'll see you next time.